Hello traders, let's take a look at gold prices. My name is Alejandro Zambrano and I'm the Global Chief Market Strategist with ATFX in London. So let's talk a bit about gold. It's been a very interesting year for gold so far, and June was really good, but July has started out being much more quieter than one would have guessed. However though, the bullish outlook for gold prices remains intact. Now, so let's break down what I'm looking at here for gold prices. So this is your weekly chart, and you can see how the price was trading sideways from 2013 up until this year. And the price was pretty much capped by these levels here, and we can interpret this like the head and shoulders pattern, with this being the left shoulder, this being a double right shoulder, and this being the head. So from that perspective, the pattern suggests that the difference between the head and the neckline should generate this sort of move. So we could trade maybe all as high as 1,700. And now there's a smaller pattern, which is just this section here, which is what we call an ascending triangle. That as well is a bullish pattern. To create this pattern, you need to have 1, 2, about 3 highs in the similar fashion like this, and there are different ways of looking at it. Some people are gonna figure out the target from the base of the pattern. I like to go somewhere in the middle so you don't get too greedy really. And here as well, we had that break to the upside, and that suggests to us that we can trade maybe up to 15,083, which is this level up here. So these are two big picture long-term patterns that have developed and triggered. Now the general idea is that as long as we don't trade back into the pattern, this market should remain bullish. Now in the short term, of course, you know, the price could potentially trade back into the pattern, maybe a little bit lower, but at least in the short term, and what I prefer is just to focus on something like the low here from July 1st, 2019. So what we do here is that we focus on this level here instead, because if we trade below here, we're probably going to go back down into the pattern, and this level here has acted as support over the last few days and weeks. And here the picture looks a bit different. You can see here how the price is clearly sort of trading sideways, but it's just consolidating before hopefully just trading upwards. And here there are different interpretations. Some people call this or interpret this like some sort of a flag, alternatively triangle. I'm deciding to call this a flag, which means that you can usually just take the base from the flag, which is like that, and it's $164 per contract. You put that to the base of the flag and you get this target here. So again, another really bullish target, and what you're looking for here to trade this, there are different ways of trading this. One is just to be buying dips, which would be buying around these levels down here if you're not already long, maybe from half this section here, with stop loss orders just below 1380. The alternative, which is my preferred scenario right now, is that we actually take out something like 1428, 1430. So we take out the high we saw last week. That should hopefully generate the break to this pattern here, and the market can potentially go upwards. Now there's a few psychological levels that we should all be aware of. You know, I would say that 1500 is the next target, and then beyond that you have this level here, which is a flag pattern target, and then you have the target up here, which is the ascending triangle pattern target. And in general, we're not gonna go all the way up. I mean, if we do, it's gonna be a very good trade, as you can probably imagine. But what we can do, and what I've been doing, is that when the market starts to go upwards like this, we can always just reduce the trend defining level, so that will be the stop. So as the price creates higher and higher lows, we can always reduce it and try to capture as much as possible before we have that inevitable correction, because of course we will have some correction at one point. Markets don't move in straight line, but at least if we follow it with a stop loss, we can catch most of the move. So what's also going to drive this to the upside? Well, there's a lot of things that could drive this market, but the primary reason for this going upward right now is the idea that the US central bank is going to cut interest rates. Thank you, and bye-bye.